So welcome to another week of Lunch Money. For those of you who are new to Lunch Money, we Sharesies host these every Thursday lunchtime. And all our past recordings, plus the recording for today, is also available as a podcast. You can get this on Spotify, Apple Podcasts, and Google Podcasts. We've got a great range of guests there from previous episodes as well. Today, I'm joined with my colleague Alice. I'm Lauren Croft. I'm one of the product owners at Sharesies, and I look after a team that handle all the corporate actions, tax, and also a whole range of business as usual tasks as well, Sharesies. Alice, tell us a little bit about yourself.
Cool. So hi everyone, I'm Alice and I'm a financial analyst here at Sharesies. So I sit in the investments team and support other functions of the business and providing that kind of financial lens into things. So you might have seen me on Lunch Money before, but just a reminder to everyone who's listening that if you have any questions for us, you can submit them through the Ask a Question tab just down below. But don't leave questions in the chat discussion area as they'll likely be missed.
Awesome. So now for the wee legal disclaimer. Investing does involve risk. You aren't guaranteed to make money and you might lose the money you start with. We don't provide personalised advice or recommendations, and any information we provide is general and only current at the time. Further to that, please be kind and respectful to our speakers and your fellow viewers. Otherwise, we may take steps to remove you from the webinar.
Awesome. So today we are joined by Barry Coates, who is the founder and CEO of Mindful Money. So Mindful Money is a charitable social enterprise that aims to educate and empower the public on ethical and impact investing. So Barry's here today to chat about ethical investing. So welcome.
Kia ora.
Welcome, Barry.
Kia ora koutou, tēnā koutou katoa. Thank you very much for inviting me on.
Oh, we're really excited to have you with us today, Barry. Just a wee quick one at the start is Barry has awesomely provided some slides for us today. They won't be visible if you are listening from home on a podcast afterwards, but we'll do our best to describe them so everybody can come along for the ride. But before we get into any of that, Barry, can you tell us a bit about yourself, who you are and what's your story?
As those who can watch this visually can see, I'm really old and I've been around for...
You look great.
You're too kind. So I got involved in sustainability fairly early on in my life and was passionate about it when I was young and kind of drifted into finance and got a degree in commerce and a master's from Yale University in finance and other things, and went off and did consulting. But then I wanted to come back to the issues of environment and sustainability. And there was a particular time where there was something called the Earth Summit, and it really set the trajectory on sustainability. It was where the first Convention on Climate Change was signed, first Convention on Biodiversity was signed. So it was a big deal at the time, the biggest world conference ever held. And that, for me, was a real turning point. And since then, I've been doing a whole lot of things on sustainability at the global level. I left New Zealand for 24 years on a long OE and did a lot of stuff around global sustainability, global environment, and particularly poverty reduction. I came back to New Zealand in 2003, headed Oxfam for 11 years, and
wow.
Went to Auckland University to set up a sustainability program. I went into Parliament. I was briefly a Green Party list MP. And then after that, I wanted to do something that sort of went back to things that I had started in the UK. And the issue with ethical investment was always something that I thought had to happen. It was just going to be the right time for it absolutely to take off, a kind of a tipping point. And I think that time is now. And so I've set up Mindful Money to give it a big kick along in New Zealand.
Oh, that's an incredible journey to get to where you are today. And I'm sure all those jobs and experiences have added into what Mindful Money is now. Can you tell us a bit about Mindful Money and like specifically why you started as enterprise? You touched a little bit on it before, but diving into it more.
Yeah, so we're set up as a charity because we want to shift money from bad stuff like pollution and exploitation into good things, into companies with high standards, into things that make a difference for the environment and climate change, things like renewable energy, affordable housing. And we ought to be able to invest in those things because these are the things that our society really needs if we're going to address the challenges ahead. So what we're trying to do is shift money in that direction. The first thing we've done is bring transparency to fund investing. So as you know, you can either invest
Yeah.
directly in shares or you invest in funds. Funds might be Kiwisaver funds or they might be retail investment funds. So we're able to now show to anyone what the companies are that they invest in their Kiwisaver or their retail investment fund. So we've got 300 Kiwisaver funds on our website, 400 investment funds, and you can find out not only what these funds directly invest in, but what funds they invest in. So we unpick the funds that the funds invest in order to provide a full picture of the portfolio, and then we relate it back to the things that people care about. So every year we do a survey and we ask people, what do you want to avoid in your investing and what do you want to prioritize? And then we're able to relate what people invest in to those kind of issues.
That's incredible. So to summarize that, is the whole purpose and point is to provide that transparency and actually give investors sort of control around where their money goes to the issues that they care about.
Yeah, and the lovely thing is kind of transparency brings some accountability. So these fund managers are for the first time seeing on a public forum all of the companies that they're investing in, and a lot of them are very embarrassed by the fact that they're investing in really nasty oil companies, or they're invested in pornography or gambling or nuclear weapons manufacture. So we did a study that said that 88 Kiwisaver funds are invested in nuclear weapons manufacturers.
Wow.
Wouldn't you believe it?
So,
a country like New Zealand.
You wouldn't.
88
Yeah.
Kiwisaver. So what we're doing is we're trying to out this stuff. So all of the information is available to the public. We try and make it as easy as possible to access, and it's all absolutely free.
So it's like giving the power back to the investor to have control of those decisions. And so you're already seeing influence then of those changes coming through into the industry.
Huge.
Yeah.
And we thought we would need kind of hundreds of thousands of people who come and invest through our website in order to make those changes. But actually, the combination of the transparency and the stuff that we do by way of kind of talking to them about investing ethically and kind of leading them to good practice means that actually these changes are happening really, really fast. And we're at the moment just doing an award ceremony. It's on Tuesday in Auckland, and kind of sold out at a couple of hundred people, and almost sold out. Maybe one or two tickets left. But it's setting best practice standards for these funds. And what's best practice now is not only avoiding stuff that you don't want in your portfolio, it's kicking through into saying, okay, we're going to include investments in social housing. We're going to include investments in mental health. We're going to include investments in things that people really care about.
Cool. I've got one last question, but then I'll pass over to Alice. But when did you first, so you mentioned that you were doing some work in the space in the UK. When did you first start noticing that this was an issue and kind of wanting to shed light and caring about ethical investing yourself?
Oh yeah, I was investing in various companies, and at the same time I was quite active on sort of global issues. There's a company called Freeport Mining, which operates in West Papua, the Indonesian occupied western part of Papua New Guinea, and their mining operations affect thousands of people. Their facilities have been used in the past as a base for the Indonesian military. There's rampant human rights abuses. there's something like 200,000 tons a day of waste going into local rivers, and this company there was an international campaign. I was involved in that international campaign, and then I started to realize that the fund that I had invested in actually invested in this company. And so far from just being a campaigner about the company, it made me realize that these things are connected. We can do all these things on sustainability, recycle and take plastic, take our bags along to where we go shopping, and we can be good sustainability people and walk and cycle everywhere. But our money might be out there facilitating really bad stuff. And it's surprising how much impact those investment decisions can have. So that's my story of how I got involved. Jose, there's a cartoon that maybe you just want to see if you can pull up on screen, because in a way I also came across this cartoon that says a lot about the finance industry. Basically, the finance industry operates as if it doesn't matter where your money goes. So the cartoon showing some people in a cave in a post-apocalyptic world where the world is destroyed, and they're saying, yes, the planet got destroyed, but for a moment in time, for a beautiful moment in time, we created a lot of value for shareholders. And that's the way the finance industry works. That is all about returns. It's all about risks. It's not about what are the consequences of where the money goes and what the money does. And that's the thing that we're trying to change through mindful money and through the concepts of ethical investment and impact investment. And I think that's it's a change that we'll say in future. What do you mean there was a time when you didn't even ask what your money did and where it went? That actually it should be just common sense to say, yes, whoever's investing my money is either using it to do good things or bad things, and I should have that control over it.
It's a very powerful mission.
Yeah, definitely. And I guess it's that constant reminder that what you do with your money, it does actually have an impact. And even though you might be a small investor, where you invest can kind of bring on that social change, or like you say, it can actually force companies to change and be more transparent and be held accountable for what they do. But Barry, something that interests me, and you mentioned before that you got into this space quite early on, and it definitely feels like, the ethical investing and the environmental, social and governance performance of companies is something that's really come to light in recent years. Is that the case? And, what's kind of driven that trend?
Yeah, so there's a few things, and it's worthwhile just unpacking the whole idea of ethical investing a bit. So, Jose, do you want to bring up the second slide? There's different ways to think about it. So the first thing in traditional investing, you've got a case where the fund managers don't really know about where the money is being invested or don't really care, and it's not at all material. And then you've got the first responses to say, okay, let's avoid investing in stuff that people are concerned about and things that are going to cause harm. So, get out of nuclear weapons, get out of human rights violations, animal rights violations, etc. So that's the kind of second avoid harm area. The third thing you can do is engage with companies in order to improve their behavior, in order to improve their practices. And that's what funds are starting to do at the moment, because the whole idea of being a shareholder should be active with your shareholding so that you're part of the corporate governance, because as shareholders, actually, you own the company. And so these funds that act on our behalf should be pressuring the companies to behave well rather than behave badly. The third thing you can do is you can invest in companies with higher standards, and you can invest in better companies, and that's what we call kind of better standards or higher standards of investing. And then finally, at the nirvana of what we want is this area called impact investing, where actually you're investing in companies that do positive good in the world, and they earn a good financial return. So, um, uh, really, what's driven the ethical investment movement is a realization if you do these things, if you avoid the really bad companies, then you avoid the situation where your shares will go down in price. And so it's like fossil fuel shares. If you'd invested
Yeah.
in fossil fuels over the last 6 years, your money would have plummeted by, we estimate, about 60% compared to the baseline in 2015, but far, far more compared to the market average. Um, the second thing, so that's a kind of better returns on avoiding stuff. But then as companies improve their behavior, they also often attract more investment. They do well financially. And many people know this. They know that if a company is practicing sustainability or behaving well, then they're attracting customers and people are loyal to that brand because they like the brand. And their employees like them because they're a good place to work and they treat their employees well and they're an ethical employer. And they don't get sued for environmental liability. So it's natural that the kind of well-managed companies, ethical companies, sustainable companies, then do well financially. And the research shows that. And this is an interesting thing because far from being ethical costing you money, actually what the evidence says is that you earn a higher return. And it's kind of like you can have your cake and eat it too. And
So great. So against the norm.
yeah,
Like your perception, and I think what we've been brought up
Mm.
to believe is that it's just too hard and it won't give you the return that you invest into it. But what you're saying here is that the numbers are actually saying otherwise.
yeah. So really, what's driven ethical investment are two things. One, the financial industry is starting to wake up to this stuff. And the head of BlackRock, the world's largest asset manager, said, actually, this ethical investing makes sense, or responsible investing makes sense financially as well as morally. And therefore, he said, the question isn't why would you do this? It's why not. And that, from the financial perspective, has really driven huge growth in this worldwide. But what also has driven it is the consumers wanting to have their money aligned with their values and wanting to have money that does good in the world. Because if you're a financial member of the financial community, you're not necessarily concerned about moral things like doing good in the world. You're more worried about how big a return you get on your investment. So the combination of the consumer pressure, which concentrates on impact and what companies do in the world, together with the financial incentives, then has really driven this, and it's only just started. It's going to continue really strongly.
That's really interesting. And actually, that was something I was super fascinated to hear your thoughts on was, is there a trade-off between investing ethically and returns? But yeah, you do raise a really good point that, consumers are forcing companies to change. You've got that spectrum of people avoiding investments, engaging with companies, and then, doing that impact investing. And something I saw recently in the news was around ExxonMobil, the big oil company. Some of their directors got essentially ousted and replaced by some activist shareholders. And I think that was just an example of like how this comes into play in real life.
That was very cool. That was very cool. There was a hedge fund called Engine Number One, and they were kind of committed to climate change. It was actually named after a fire engine. What they did is they convinced the big institutional investors to support them, and they went to Exxon with a resolution for far stronger climate action and transitioning away from fossil fuels. And Exxon has for a very long time funded climate deniers. They've lobbied to stop climate change regulations, etc. So there's a lovely irony that actually it was the power of investors which changed the company management. So they swapped out 3 directors on Exxon's board, and Exxon's going to look like a very different company in future, hopefully.
Oh, hopefully other companies are inspired and follow suit.
Indeed, and when I explained about the different strategies of ethical investing, then that issue of engagement and kind of active ownership by shareholders is changing companies, and it's powerful.
Yeah, and it is just an example of how your money and your investments do have power and the ability to implement change. Yeah, great. And Laura, Lauren, I'll pass back over to you.
Gosh, that
Sorry.
happens all the time. No, that's fine. Really keen to hone back in on New Zealand here. What are the ethical issues that New Zealanders are most concerned about when it comes to their investments, and have these changed?
Cool. So we do an annual survey of the public on what they care about, and particularly we ask them what they want to avoid, what they want to invest in, and the answers over the last 3 years have been quite consistent. And many people are surprised as to what the top issues are, and it's actually the top ones are around human rights violations of
Yeah.
labor rights and in supply chains, and around human rights violations, and secondarily around animal welfare issues, whether products are tested on animals, factory farming, those kind of issues, and they're very dominant. Then there's a kind of a layer beneath that of pornography and gambling and tobacco, etc., and fossil fuels and weapons. So many of those issues, and then further down is concerns uh, about alcohol and meat products. And we're constantly sort of asking for a few new questions. Like, a lot of people really like to avoid companies that don't pay their fair share of taxes. And it's an increasingly important issue, and we're compiling a kind of database so that we can construct an index of the companies that don't pay their fair share. So there are issues like that are coming up at any time. So that's what people want to avoid. What people positively want to invest in
Yeah.
is renewable energy, affordable housing, companies that can help with clean water, and aspects of nature conservation. So those are kind of popular things that people want to invest in. Those
Are you?
those
Oh, sorry.
investment
You go.
opportunities aren't widely available yet, and where New Zealand has been behind the eight ball is we've had surprisingly few investment opportunities in companies that are doing those good things in society.
Oh,
But
and
it's
that's a tough challenge. But the more people that are interested in that space, as you mentioned before, that's surely going to drive the companies that are looking at it and the companies that are created to support that as well.
absolutely.
Are you? What sort of new trends are you seeing either coming up in sort of that ethical investing space that people want to put their money in, or that people actually care about not putting their money in? Are you seeing new themes come up, or are we staying in those sort of like more traditional areas of like human rights and
No, I think those are the main things. As I said, there's always issues coming up, like privacy and social media. So Facebook issues.
yeah,
People are worried about that. So there are particular issues that do tend to come and go a bit, but overall, this they've been fairly stable, um, but one of the interesting things about the impact investing is there are now opportunities for people who qualify as wholesale or professional investors. Like, if you're investing a lot of money, or if you've got investment qualifications, that you can
yeah,
invest in impact funds these days, and you can at the moment invest in individual companies through crowdfunding or through uh, venture capital, but generally the high levels of investing are restricted to those who are professional and wholesale investors. But that's changing, and we're going to see more and more of the companies that are doing good coming up as investment opportunities, and funds that are doing good, or impact funds as they're commonly known, as being available to investors. And the thing that people should realize is that these are often very risky investments, and it's not always a good idea to put your life savings in them. But for many people, if they've got a core of their investments that they're happy with, that are relatively stable and relatively good returns, then they can say, okay, now I've got a certain part of my portfolio that I want to invest in stuff that I really care about. And it's that bridge between investment and charity, where if you're impact investing, you're investing and you can often get good returns,
Yeah.
but it's generally more risky.
And Barry, off the back of that, something I'm interested to know about is like, since ethical investing has kind of come into the spotlight more recently, it feels like every company out there is trying to show what good they're doing for society. You know, you go onto a company's website and they talk about what they're doing for their community or their environment. How do you actually properly assess these companies and read between the lines to tell if they're, engaged in any of these activities that investors might be concerned about?
It's so true. There's so much greenwashing around, and whether certifications, it's good to go for certifications, so that you're able to find the certifications that you trust. For example, on timber, if you want to buy something made of wood, then generally the Forest Stewardship Council certification is good. There's other certifications around for fair trade, for example. Spent a lot of my career involved in fair trade and these kind of certifications. If you want fair trade, then you either go for the Fair Trade Association trademark or Trade Aid as part of the World Fair Trade Organizations. So those are credible certifications. Similarly, in organics, there's credit. So that's around kind of how you can tell their products are certified. In terms of the companies themselves, there is no great rating across companies that is publicly available. There are rating agencies that rate companies according to environmental and social factors, but generally that information is only available at quite a high price. And I would say generally those ratings not particularly what I would call accurate or insightful. So I think you have to be a little bit careful of just blindly following the latest ratings, because some of them are quite misleading. So there's usually no substitute for hard work. If it's in relation to funds, then Mindful Money can help with what's ethical funds, and so there's stuff on our website that's available for free.
Exactly. I was just going to say, and obviously Mindful Money's out there for, looking at different funds and Kiwisavers and that. And just one last question from me, Barry. When someone is investing ethically, it quite often means excluding certain sectors and companies or even whole funds in that. Does this affect someone's ability to diversify their portfolio? And if so, do you have any tips on ways that someone could get around this?
Yeah. So typically, what as your listeners and watchers know, then financial theory says that if you diversify as much as you possibly can, then you diversify away the risk of individual companies having a bad year. So that kind of maximum diversification is a good thing. However, you can achieve that kind of diversification through not necessarily many thousands of companies. You can actually achieve it through diversification of a much lower number of companies. And certainly when we're talking about excluding some sectors like nuclear weapons manufacturers, you're excluding a very, very small part of the market. Even if you're excluding tobacco or alcohol or sectors like that, there's still only a tiny percent of the market. And provided the rest of your investment portfolio is structured in a way that is representative across different types of company, you're not missing out on almost all of the benefits of diversification anyway, and you are missing out on the negative returns that you get from companies that are doing badly in those bad sectors, like the fossil fuel companies. So there are sort of double benefits in a way. You can get diversification, but you can also avoid the parts of the market that are likely to be doing badly anyway.
Very true, and good point you raised around there's many aspects of diversification and ways that you can look at it, and different types of risk as well. Cool. So I might pass over to Lauren to look at some of the questions from the audience.
Yeah, we've just got one quick question before we jump in there. What are if someone's interested in just starting in ethical investing, this is all new to them, and they're not too sure where to start, do you have any tips or resources you could refer people to who are interested in investing in this space?
We've got a nice guide on the Mindful Money website, sort of the Ethical Investment Guide. There's also some information on Sorted, but they don't have much on ethical investment. They have lots of stuff on investment as a whole and managing your money. There's an organisation, Responsible Investment Association of Australasia, RIAA, R-I-A-A. They have a coverage across Australia and New Zealand. It's probably much more Australian oriented than New Zealand, but there's some useful resources there. And we've got a lot of other blogs and research reports and articles on Mindful Money's site.
Oh, that's great. Thank you. Yeah, I can vouch for Mindful Money. It's a really useful tool if someone's interested in that space. I've used it personally. All right, so jumping into Q&A. So these questions, because we don't have a heap of time left, just really quick fire, short answers, and we'll try to get through as many questions as possible. So first up from Milan. As an index investor, traditionally I've primarily invested in the S&P 500. Is there a similar fund or funds that target some popular indexes for us to invest in ethically?
Yeah, really good question. So what's happened in the index-related space is that there are new indexes that have now formed to exclude the bad companies. So they've basically taken the exclusions that are commonly provided, and they're producing a screened index. And that's there are Vanguard funds around that. There's a Vanguard Ethically Conscious Fund, for example. There are some ESG funds which are perhaps not quite so well screened. But there's some really interesting new products. Kernel's come out with a really interesting new variant on an index fund where they're upweighting and downweighting companies depending on social and environmental issues. So there's more of that crossover between the ethical investing space, which has primarily in the past been active investment, but now it's coming into the passive investment space. So you can still have your low cost funds, but with an ethical overlay.
Yeah, there's definitely a couple of funds on Sharesies too, like Pathfinder and Pathfinder responsible funds and things like that. So there are options out there, and like we mentioned before, I guess they're only going to grow in that space.
Pathfinder's a little bit more actively managed, and they don't have the sort of low cost fees that an ETF would. But they're a very good fund, and they're one of the ones on the Mindful Money site, along with others, Booster, Simplicity, and others. So.
That's great. So there are options. All right. So we've got Divest. The next question here, this one here is divest or engage. As an investor from New Zealand with limited investing platforms and small investment funds, it seems like there's a relatively limited opportunities to engage with companies, especially international ones, to nudge change behavior. Do you think divesting is a more effective way of being an ethical investor? Also, how can investors engage with companies when they have relatively limited holdings? Quite a long question there, but you might just want to touch on what does divesting mean as well.
Yeah, so divesting is avoiding investing in a particular company or selling it off. By itself, if you divest from a company and you're only holding a few shares, it doesn't really make much difference because somebody else is going to invest, and it doesn't really affect the company much unless you then write to them and tell them why you've divested, which is always a good thing to do. But if you do this on a massive scale, then it makes a huge difference. And what's happened in fossil fuels, for example, is that the 350.org campaign, I'm a board member of 350, they've mobilized $14 trillion of assets to divest from fossil fuels. And it's had a major impact on the fossil fuel companies. And so at that level, divestment really makes a difference. And so, being part of divestment, and the same things happening in alcohol and weapons and other categories. So yes, divestment can have impacts where it's part of an international campaign. On the engagement side, yes, a New Zealand fund manager engaging on an international company is difficult to do, because typically we've got a really small amount of money to invest in, and there's not much leverage. However, in a similar way, there are collaborative ways that investors work, where they're able to bring combined resources together and put pressure on companies. So in some cases, it is possible to engage even from a New Zealand base on international companies.
It's good to know. All right. So, speaking of those larger funds and companies, what efforts are large public funds such as ACC taking to divest towards more ESG investments?
Yeah, so I mentioned 350.org. They've been doing a campaign to get ACC to divest from fossil fuels. Campaign's still going on. ACC has said in principle they're headed in that direction, and but 350 is calling on them to move faster. In other ways, ACC's starting to make some changes, and they've now set up new funds for impact investing on healthcare and recently on climate change, which is good. But I think the feeling is that they could be doing a whole lot more. The super fund has traditionally been a leader on responsible investing, but in a way, the whole sort of world of ethical and responsible investing has moved. And I would say that the super fund isn't at the boundary of best practice anymore, and they are undertaking a review at the moment, which hopefully will freshen up and strengthen their practices on social and environmental issues.
Yeah, it's good to know. It is an iterative process, right? That constant cycle of improvement. So next one here from Richard. Is there a good source to understand the composition of major indices, i.e. S&P 500, for issues of concern like human rights violations, animal testing, fossil fuels, weapons, etc.?
Not specifically, although one easy way to do it is to go into Mindful Money, and there are some Smart Shares S&P 500 funds, and we basically take all of the S&P 500 and we'd run them against fossil fuel screens and weapon screens. So that's the only way that we've seen internationally. So the funny thing about Mindful Money is that this analysis isn't done anywhere else in the world that we've been able to see. And so we can do it in New Zealand partly because there's regulations that require funds to disclose their portfolio holdings at the first level, and then we undertake the research on the other levels of the funds that they invest in. So that would be a shortcut way to be able to get to index funds. The other thing is, if you look hard, you can find the index fund portfolios through internet search.
Yeah. Someone has mentioned in here a site called Fossil Free Funds website. I don't know if you've heard it before, but
yep,
that one there sounds like it.
There's a US website called As You Sow, which has some really great information. So there's a fossil free funds and a weapons free funds, primarily oriented towards US funds. But that's also, that's a good resource.
Well, thank you. And we've got the last one here. This one's kind of more directed towards sharesies. So Alice and I will answer it here, but also this might be a good time to shout out a little bit as well that there is the opportunity to do a bit of an Ask Us Anything for Sharesies as well, and on our Share Club platform on Facebook. But Alice will touch on that a bit more at the end. So the final one here is Sharesies considering having ethical information about companies' funds available on the platform for its users? So yes, we are. This is something, Sharesies is a B Corp, so we as a business really strive to be very conscious about how we operate, but also want to offer those opportunities to our investors. Barry's touched on this a little bit before. There's a level of disclosure, and there's also an understanding of what an ethical or responsible investment does mean to one investor versus another. But we do offer quite a few of the Vanguard funds available in the US on Sharesies, as well as so we've got the Pathfinder and a few other ethical investments that are available on Sharesies. But yeah, we're always striving to improve. So if there is a fund you're interested, please get in touch with our investor care team and let us know.
Cool, thanks, Lauren. So thank you to everyone for tuning in today, and massive thank you to Barry for joining us. You've been an absolute wealth of knowledge and have so much experience in this space. It's been really, really interesting to hear all of your thoughts and you sharing your wisdom on this. Next Thursday, we'll be joined by Grant Straker from Straker Translations. So that's a New Zealand-based company who use both human and machine learning to provide translation services to clients around the world. You can register and listen in next week to find out. You can register through the link that should be appearing in the chat. And otherwise, again, thanks to Barry and thanks, Lauren. We'll enjoy the weekend and we will see you next week.
Yeah, see you next week, and thanks heaps, Barry. It's been a really great chat.
Ka kite ana.